In tatters due to the prolonged pandemic, the global supply chain was recovering when Russia struck Ukraine with all its might. Last week, the 145-year-old London Metal Exchange was forced to suspend nickel trading and cancel trades after prices doubled overnight to $100,000 a ton amid a market panic triggered by Russia's actions. The exchange described the current events as unprecedented. Russia accounts for 10% of global nickel supply, 6% of the aluminium output, and 18% of wheat exports. Aluminium, copper, zinc, lead, crude oil, wheat, natural gas, coal, and edible oils are some of the commodities that have been on the boil as traders feared supply disruptions on account of the Russia-Ukraine war. With the price of metals and plastics used in appliances and consumer durables shooting up, several manufacturers had already effected price hikes last year. They are gearing up for another round now. Usha International, which sells fans, cooking appliances, sewing machines, and water heaters, said the company may have to pass on price increases to the tune of 10 to 15% in April.
The main commodities would be steel and plastic, both are up. And also because of the rise in the crude oil prices, freight costs are bound to go up. So which is going to affect everything. I think the industry is in for a price increase. The only difference would be that it would not be an immediate price increase because most of the manufacturers would have planned their purchases right up to May, considering the summer season. So possibly the industry will see a slew of price increases happening from June onwards. So I only hope that at that time the dollar stabilizes and we don't see any further hike in the dollar. Our industry has been under a price pressure now for more than a year, and we've been taking price hikes right through. And post Diwali, again, a major price hike happened. Various companies staggered their prices. Some did it over a period of 3 months, some did it over a period of 2 months. On an average, the prices went up from about 7 to 10%. See, the good thing is that this is the first summer that we're going to have after 2 years. The last 2 summers were badly impacted because of COVID. Obviously, the summer season is going to be far better than the last 2 years. So in that respect, we're going to see a good H1, say Jan to June.
FMCG companies too are preparing to pass on higher input costs. Hindustan Unilever hiked prices across its portfolio of products by 3 to 13% in multiple tranches in February, with the sharpest increase of 13% seen in the 100-gram Lux soap pack. Crude oil derivatives and vegetable oil are key raw materials used in making soaps, cosmetics, and detergents. Dabur India CEO Mohit Malhotra recently highlighted continued inflation in hydrocarbon derivatives, paper-based packing material, raw honey, and spices. He said Dabur undertook calibrated price increases of about 5% in key products. The sharp price increase in all major commodities is hurting every step of a company's supply chain, from manufacturing to packaging to distribution. Let us hear more from Krishnarao Buddha of biscuits and confectionery maker Parle Products.
Our main stakeholders on biscuits, for which some of our key raw materials are wheat flour, oil, vegetable oil, and sugar. Fuel is also one of the key inputs to produce in manufacturing. Last 4 quarters, I would say, we started seeing input prices shooting up. And they have continued to rise through the entire year of 2021. And we see that continued even in this quarter. And with the war, we are expecting this to continue for even longer time. We've already seen almost 100% increase in the fuel cost, okay, as far as our manufacturing is concerned. The prices of palm oil is also shooting up significantly because of the war. Now there is a demand for wheat. Though we have India as a country, we have surplus wheat with us. So packaging material has been on fire since, like I said, last 5 quarters, and it continues to be. So these are all derivatives of crude. The plastic laminates. For the past 5 quarters, we have been continuously taking price increases. We are already planning for the next set of price increases. Fortunately, I would say consumers seem to have accepted that there is an inflation, and it has not really had as much of an impact on the demand.
Although commodity inflation is not expected to cool down anytime soon, demand is still holding up, led by the post-COVID economic recovery. However, private consumption could turn sluggish again as it faces headwinds from soaring commodity prices.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.